Afternoon, everyone, and welcome to this Kensington webinar, Technology in the Mortgage Market Post-COVID. I'm Frances Taylor, Head of National Accounts at Kensington. I'm joined by my boss, Craig McKinlay, our new Business Sales Director, and Peter Harte, our Lender Sales Development Manager from Mortgage Brain. Thank you for joining us, Peter. So this may be your first webinar with us, or you could have been one of the last 4 that we've done. So throughout COVID, we've really been talking about the impact that firstly it had on specialist funding and the specialist market, looking at green shoots of recovery. We then did a lot of research with our third-party partners, our brokers and our accounts to look at post-lockdown what the future looks like for brokers and customers, which we'll reference back with them throughout this webinar. Today, we're talking about technology in the mortgage market. If there's any content or anything that you want us to discuss and talk about, please feel free to send that over to me. Just put me over an email. We're more than happy to research and put together more information for our next webinar. So just to set the scene for today, you have the 3 of us. I'll be covering customer and changing behaviours in all influenced by technology. Peter will then be covering broker and the benefits and opportunity through sourcing and CRM. Craig will then take lender and talk about how technology can enable and influence service, products and sales. We'll just finish then just a bit on how Kensington are embracing technology. So I'm going to cover customer first, so I'll say goodbye to Craig and to Peter. Customer and technology is a really broad subject. So really to put this whole webinar into context, we just need to reference customer and consumer behaviour in general. So what I did is I thought I'd look at a customer, a middle of the road customer, quite technology focused, and I chose myself. So I think I use a fair bit of technology. I have quite a few apps, online shopping, probably more clothes and wine than anything else, but middle of the road, a bit of Word, a bit of Excel. I've got a laptop and iPad. So I think I'm quite generic. So what I then did is I took my phone and I had a look at the most used applications on my phone. So I just put these up on the screen. And what I realised as I was looking through this and looking at all these different apps and what they did, my life from waking up in the morning to going to sleep at night is 100% immersed in technology. So all of these apps you see here, I have on my phone bar one, and I'll come back to that one. You can have a bonus point if you can tell which one it is. But from waking up in the morning, kind of if you look at pre-COVID, sorry, from waking up on your alarm on your phone, I'd order an Uber to the train station, I'd book my tickets online, check the train was coming and what weather it was, so I knew what shoes to wear. So getting on the train, ordering your food from Waitrose and doing your weekly shop, but then ultimately knowing you're going to use Deliveroo later on anyway, so it may be a bit irrelevant. So going on Airbnb and searching for somewhere to stay and go abroad on holiday, buying those essentials from Amazon, whilst all the time listening to Spotify and choosing what you're going to watch on Netflix that night. So my constant day involves technology. Some of these things I use on my phone, some I use on my iPad, and I like to use different things. And since COVID, absolutely, the use of these types of technology have imploded. The one that I haven't got on my phone because I just do not understand it is TikTok, which is that little music symbol in the middle there. And since COVID, obviously, that's gone crazy online. The subscriptions to Netflix, doing online shopping, that's all gone higher throughout. So I thought that was really interesting and a good place to start. But what I thought I'd do is I'd just quickly look through the house purchase journey and the mortgage purchase journey and how that's changed and how we've been impacted. So firstly, we know that 28% of people who weren't planning to move before lockdown are now looking to enter the market. And I think how they enter the market looks very differently to what it did before. Everyone's COVID lockdown experience has been different. You might be looking to downsize, maybe a divorce, or you might be looking to increase the number of houses because you're going to have a baby. Whatever your journey is, it will influence what you're going to buy. Technology has been a brilliant enabler for everyone to work from home throughout this process to an extent. So especially in our industry, you don't need to leave your home now, but you may need more space at home. You might want an office. But ultimately, you can be flexible, you can move from place to place, and technology has enabled that. So how we search for a home is, again, it hasn't changed a lot in the last few years. And when I think of Rightmove and Zoopla, and I looked into when they launched, I was really surprised. So for 20 years, we've been using the Rightmove app and or online to search for a home. The traditional ways of advertising, newspapers, etc., used to get you free paper on a Thursday. In my case, you'd have black and white pictures of houses. That's very much being replaced by online social media platforms and them embedding. I've been kind of on Rightmove looking at something that's way out of my price range, which we all do, and then Facebook comes up with an advert to say there's a house for sale in your area. So they're very much embedded. So, and then how we purchase a home, so the estate agency experience has also changed. And this isn't a journey that everyone will take, but again, it's an option for some customers who want to go down that route. But eMove and Purple Bricks have been around since 2010, so 10 years of online estate agencies, which is a lot longer than I would have thought. Also, how you actually view a property and how you interact with the estate agent. Since COVID, not being able to go out and visit and look at a home, you've been able to look virtually and do a virtual tour. So they've kind of got their camera and they're walking around the bedrooms. Speaking to kind of one of the largest house builders in the UK, they said that point of that customer journey is not when they get offers for the houses. It's when they come then and do a physical viewing. So another layer that may or may not be needed. Again, probably customer preference. So then looking at the mortgage purchase journey, many of us would have gone through on an aggregator site, compare the market and bought car insurance, house insurance, pet insurance, whatever it may be, and gone through the whole journey online. Absolutely, a customer can go online, look at an aggregator and compare mortgages and start their journey there. But going all the way through in that one place doesn't really happen. There's other elements that come after that, but it is a place to start, and it's where we're going first. How we then apply for a mortgage, obviously there's all the traditional methods, so I'm just talking about new things and things that have developed, but we have seen an increase in the number of online telephony brokers and indeed lenders that have come out to market, some of which have been established for a really, really long time. So that journey of applying for a mortgage has been different for quite a while, and I think the key is the customer being able to choose which way they prefer. And then lastly, how we want to communicate during that mortgage purchase. Traditionally going in and seeing your banker and talking and getting an email and letters through the post maybe, to telephone, email, WhatsApp, Zoom, especially throughout COVID, Zoom and the video conferencing. But a lot of lenders still now working on going through Alexa and getting your updates directly from there. So very interesting time indeed. So I just wanted to finish on making 2 points really. So I mentioned the broker research that we've done over the past few weeks, and over half of the brokers that we spoke to told us that they'd work differently with a customer in the future, which is a really, really large amount. I think 2 things. Choice is key. Having the flexibility to start a journey somewhere and finish in another way, and halfway through going into seeing someone, is really, really important. And having options of how to communicate is really, really important too. And then lastly, technology isn't a replacement for any one of these things. It's absolutely an enabler, and it's down to the customer and the consumer to decide how they want to use that. So I'll leave that there, and I'm going to pass over to Peter to look at broker.
Thanks, Francis. That's great stuff to hear. And I must admit, from a mortgage brain perspective, we couldn't reiterate enough how much we agree with the view that technology is an enabler and it's not to be a replacer for quality of advice. What I think I'd like to start by doing is look at some actual trends within the marketplace, and the market trends. And if we look at that slide, that starts to give us an indication of just how is the market developing at this moment in time. as you may well be aware, we have Criteria Hub and also Affordability Hub now within the suite of products within Mortgage Brain. But if we look at the actual usage of those, in the last 90 days, prior to the previous 90 days, so sort of post-COVID or during COVID, then we have looked at over 39% increase in sign-ups to Criteria Hub and an increase of 7% in terms of people who are on trials using that technology to assist their clients compared to the previous 3 months. If we look at the actual volume of searches taking place, then all bar it, you could round that up to 265,000 searches have taken place over the last 3 months looking at different lenders' criteria within Criteria Hub. If we delve that slightly further, then actually what we can see is that on 42% of those, brokers using Criteria Hub were inquiring on a lender's single item of criteria. Have they had a CCJ? Will they borrow up to a certain age? But actually 58% of searches involve 2 or more elements of criteria. And I think that reflects just how the market is changing at the moment, that we are getting customers talking to yourselves, talking to brokers who don't just have a single item of their criteria that you need to check. There are multiple parts to that conversation with the client. If we look at that and look at in terms of technology as an enabler and as a time saver, then if we were to run all of those searches through and say it was 5 minutes per search with either a phone call or looking on a lender's website, then extrapolating that forward, you're looking at potentially 918 days over the last 90 days in total have been saved by advisors by using technology. That's technology acting as an enabler. If we then look at the other key element, which is, well, how much will you lend to my client? We are now in a phased out live rollout of Affordability Hub. And since coming out through pilot and during this early phase of release, 25,000 inquiries have gone through Affordability Hub, down to loans totaling over 4 billion. Once again, if you look at the amount of time that that's saving, 15 minutes per search per lender, feedback from brokers has said that they would normally look at least 3 lenders' affordability websites, then we're looking at 780 days, 781 days saved by advisors by using that elements of technology. Once again, that's technology showing you how it can be an enabler. It's not replacing the advice, it's helping you with the advice. If we look at some actual numbers based at ESIS volumes and product availability, if you look at the 12th of April as being probably the main down part of our marketplace, when as a market and indeed as a country we weren't sure how COVID was going to impact on us, then the ESIS volumes are nearly back to pre-COVID levels. They're up at 23.6%, and product availability is up at 21.6% as well. So the market seems to be there. The demand is certainly there from clients. But the last box to cover off on this slide is actually that on a recent webinar that Mark Lofthouse, our CEO, attended, it was disclosed that up to 24% of advisors don't have a website. And I think in terms of the market and how people are going to move and how people want to engage with you and how you can attract your clients, then that's possibly a key area to be looked at. I know certainly at Mortgage Brain, we have had an awful lot of increase in inquiries for brokers looking at taking on a website. And I would strongly advise that those of you that don't, consider that as being an option for you to look at. If we look at how that powers your end-to-end mortgage process, then just very briefly, that's clearly our solutions that we're talking about. But the key sat there in the middle, that is our CRM system. A CRM system we see as being a vital enabler for you to engage with your clients and act efficiently and maximize your revenues in terms of engaging in this new world. Your CRM system should be able to talk to and receive information from any number of other solutions, of which we've listed some of our own next to that as well, and indeed with Lendex being a way for you actually to submit business. What that does is it brings all your client data back into one position. They're easy access, easy recording, easy reporting, but it also saves you time by reducing the amount of time you are looking to rekey information onto different solutions. The increased amount of rekeying you have to do, unfortunately, just through human error, leads to the increased potential for errors, but it's time consuming. And once again, it's about technology being an enabler and saving you time. And once again, at Mortgage Brain, we would strongly recommend that whatever your CRM solution that you're engaging with, is it actually talking to other pieces of technology, or is it standalone and you're rekeying in data here, there and everywhere? There's been a lot of talk in the marketplace, probably over the last 2 years, in relation to APIs. And what I just want to touch on for a few minutes is just what does that actually mean for in this marketplace? In essence, an API enables two parties to talk to each other. In this case, the lenders and providers on the right-hand side, and the CRM system, be that the key or any other CRM system, to exchange data, where the lenders, the third parties, will open up and say, if you can send us this data in this format, we are then able to consume that data and respond accordingly to you. And if we look at some of the ways in which you would do that within a broker, well, then within your CRM system, you would already have filled out the electronic fact find. You already would have the product selection via the sourcing solution. You would have produced an ESIS that you would check your criteria and your affordability. Where we're seeing APIs being used at the moment from the lenders and providers is to assist with that DIP submission, the FMA submission, case tracking documents submission, payments, etc. For the lenders then to carry out their particular parts of that journey, the credit check through to completion and servicing in their world, in their environment, in their systems. The APIs enable that two-way transmission of data, which all makes it sound very simple and very straightforward. However, developing an API that covers both decision in principle, full mortgage application with all the complications that come within that, and allow for document submission and case updates. I've had a number of conversations with lenders about the budgets to support that type of solution, and you're looking at circa £2 million to build that type of solution. And then, of course, the journey doesn't stop there, because lenders' criteria, their needs for data, the market will evolve, the market will change. So the data required to support those APIs will need reviewing and updating. So it will be an ever-evolving solution. We are getting there. We are working with the lenders in them supplying APIs. I think it's safe to say that at the moment, the initial offerings are going to be for decision in principle, and potentially initially just to pre-populate a lender's website. Certainly at Mortgage Brain, we are pushing and working with lenders, and Kensington being one, to actually have a roadmap for development of APIs, so that we can incorporate DIP submission, FMA submission, etc. within that CRM journey. If we were to look at the future as to, well, what could that API journey look like? What potentially could that, where could it take us? What could we end up doing? And if we're looking at that two-way transmission of data, what it could mean is that actually certain elements of the roles that we used to take, or the journey that used to take within lender systems and provider systems, could actually now take place post or pre-submission. Things such as income assessment. HMRC are looking at opening up APIs, and we're already engaged in talking to them about that. Document assessment. There's technology to be able to read documents and look for key phrases, so that you can actually then send that to the lender accordingly. We've already seen in the last few months actually the speed at which lenders have evolved to be able to set up AVM or desktop valuations. Well, clearly the technology that is there could actually mean, well, why couldn't the broker do that at the point of submission? And then, as I said, we've already got the case tracking and document submission. We're all at Mortgage Brain, we're talking to a number of providers about electronic ID and verification to smooth that process. using technology to enable you, so you're not having to try and photocopy passports, driving licenses, etc., scan it and then send it to the lender. If we can then use that technology, then that's really where we start to see some enabling to actually get to the point that potentially what we're looking at is a digitally packaged case. And certainly those solutions and those conversations are all taking place and are ongoing. And APIs will be an ongoing journey. They won't be something which are delivered now and tick box, great, that's done. They're going to be constantly evolving and constantly developing. And I think on that point, I'd like to thank you for your time. What I'd like to do is hand over to Craig now, who will be able to talk to you about where APIs and technology is evolving within Kensington.
Brilliant, thank you very much, Peter. And hello, everybody. So we've talked about what technology means for customers. We've also then looked at what it means for brokers. So now we'll quickly look at what it means for lenders. So really there's three key areas. I think how lenders can use technology to help improve service, get new products, and broker interaction. So they're the three areas I'll go through in turn. So firstly on service. So we've talked a lot about APIs so far today, and we're using APIs and robotics that really help us deliver a seamless and fast service to brokers and customers. So as Peter said, we've got systems like Lendex, whereby the broker can just put the customer information, the fact find into their CRM system. Something like Lendex will then take it out and put it straight in the broker's application portal, so there's no need for people to rekey or actually key things in at all, which is fantastic. We're also using APIs and robotics in our back office, so we have our manual underwriters, very highly skilled. We only want them working on the really important things, so things like looking at the layers of risk, looking at things like reading accountant statements, balance sheets, because we do so much self-employed, etc. What we don't want them doing is the low value add of simple tasks. So we get the robotics to do things like the solicitor checks, the land registry searches, all those kind of things, and get the brokers to really get the underwriters to focus on the important things. And we're also using a lot of the insight, we're using the technology to get insight for us, so we understand how customers are feeling, how brokers are feeling, to inform things like Trustpilot, so we can know straight away if we've got any points of friction in the process or things that are making people feel unhappy, rather than having to wait months later to see if things turn into complaint. We can get on top of things really quickly, which has been a big focus for us. And pre-lockdown, using that kind of new technology got us to about an 11-day app to offer, which is fantastic. We want to get back to that post-lockdown. Obviously, life's a bit more complicated at the moment, but we want to get back to that, and our aim is to get that down to 5 days in the next 12 months. So that's service. So moving on now to how we can use technology to help us look at products. So as lenders, we are drowning in data. We've got so much data, and Kensington's been around for 25 years. So we've got 25 years worth of application data, and then obviously we have the customer on the books, all the servicing data. You know, I've had some customers with us 40 years. That's 40-year term. They've been on the kind of 25 years into that. So, you know, we've got a huge amount of data from these people about how they behave once they're with us as well. So it's not just the application data that brokers capture. So we've got all this data, but how do you use it? And the technology that we use, things like Power BI, and we've got a tool called Vector, which basically takes that enormous amount of data and turns it into something usable. So a really good example of how we've built a product using that data is the Hero Mortgage, which is very apt at the moment. So the Hero Mortgage is targeted at teachers, nurses, emergency services, and the armed forces. And Vector shows us that you're looking at all the data, that people in those industries are pretty recession proof, because we can model that through the last 2 or 3 recessions. It also shows us that although these people don't earn a lot of money, what they do have is a steady increase in their earnings. So they tend to get time-based increases, and you can have pretty good certainty. A newly qualified nurse band C on £26,000, he or she will be earning £32,000 as a bandee in about 3 or 4 years' time. So we can take that information and turn that into a proposition. So the Heroes Mortgage, as an example, says that because we know these people have really good security of income, so nice stable increases and unlikely to get made redundant, we can give them really good affordability. So we'll go up to 5 times income for those customers. So we'll take that data and turn it into some kind of proposition. Very important for us in terms of self-employed. Self-employed is about half of the total business we write. So again, we can use all that data to make us feel very comfortable with self-employed people. In fact, we often say we think self-employed people are kind of the better credit risk than employed people. We've got some really good evidence from Vector that proves that. And then the final piece that we can use technology for is really how we communicate with brokers. So it's really important our data, that we take our data and our decisioning, where we make it public to you guys and give you decisions. So whether that's things such as affordability calculators on our websites or criteria checkers, such as Peter mentioned earlier, we need to make sure they're up to date. We need to give you the correct answer, and we need to make sure that the answer you get on the affordability calculator is very, very similar to the answer you get when you do a DIP, which is then similar to the answer you get when you actually do an application. And as most lenders do, we're constantly changing prices and we change criteria regularly. So we need to make sure they're all up to date and they all tell you the same story. So that's really important for us. And again, we use technology to drive out those results. Any of you who have interacted with our field sales team will have seen Power BI and iPresent, which sit on the laptops, on the iPads of our sales guys. So you can see a dashboard in the middle of the screen. So for our 20,000 brokers, we have an individual dashboard. So each broker has a dashboard that tells us, and we can go through with the broker, their performance with us. So how many apps have they given to Kensington? What's happened in terms of app to offer ratio? Geographically, where did they come from? What was the average value? What was the prop fee? How did they perform? All those kind of things, loan to values, product types, everything. So we can look at that, and we can also look at what business you've written as a total. So not just looking at what you've given to Kensington, but what business you write with everyone else. So we know if we do what kind of share we have of your buy-to-let business, of self-employed, etc. And we can then look at that and work out, is there any training needs? Is there things about our proposition we need to tell you about? We can help you build your business. So for instance, we can see if you don't write much limited company buy-to-let business, but potentially we can see there's lots of that in your area. We know that potentially you could write more, so potentially we can help you with that, and we can train you and your team on how to write more buy-to-let business. And then we use things like iPresent, which is a presentation tool which has all our criteria in. 2 clicks gets you to any interesting bit of criteria or any particular slides we want to show you. Then rather than sending you everything, 35-slide deck, we can then say we talked to you about these 2 slides, and we can automatically click those and they appear in your inbox. So trying to make the conversations with you add much more value. We want to move away from the old ways of just coming in for a cup of tea and a chat about, thanks for your last case and how's business, to actually get really data driven so we can really see how we can add value to your business. And then things like our RoboChat, which is what we call our lending criteria digital assistant. So this sits on our website and it can answer 1,300 questions instantly. Works 24/7, doesn't take any cigarette breaks, and can answer simple questions really, really quickly. So that's fantastic. And like I say, it works 7 days a week. BDU is brilliant, but those guys only work 9 till 5:30. They're really good if you've got a kind of layered question. We've got a customer who's self-employed and wants this LTV and has some credit problems, whereas the RoboChat can answer simple things really, really effectively. And virtual interactions, doing things like this today. I mean, this would have been much harder 6 months ago when people weren't as used to using these kind of tools as you all are now. Making sure we've got Zoom that we can use, Microsoft Teams we all live on constantly now. Being able to communicate with 1,000 brokers, do virtual events. Really big opportunities for lenders and how they can interact with brokers, and hopefully, move to a model that suits the broker much more. So rather than kind of saying, well, this is how we're going to interact with you, saying to brokers, these are the ways we can interact with you. What suits you? How and when do you want to use these tools? So that's really just looking at how we think the opportunities are for lender with technology in the next few months. So I'll now wrap up with an update on Kensington and where we are. So 3 key areas of focus for us at the moment. One is on our platforms, bearing in mind this is a technology conversation. So we're just launching our new broker portal, which is in test at the moment and should go live about the end of August. So that's a new broker portal. That does 2 things really well. It gives you much better automated communications about where your case is, so you don't need to go and look on the portal. It will tell you what's happening. So much better communication for you guys. Much faster for us, so hopefully we can get that to offer time down, much more efficient. And critically, this allows us to enter new customer segments and new product types, the things that we're not in currently. There's a whole range of things like shared ownership, expat buy-to-let, holiday lets. These are just examples of the kind of things we can look at. We can decide whether we want to enter, and this new platform allows us to do that really, really quickly and change prices really quickly. So it's much more sophisticated, which is great. APIs into sourcing systems we've talked about, and then also, you know, we've mainly talked about new customers and brokers. In terms of existing customers, we've also introduced some leading edge technology for them. So consistent with most of the industry, payment holidays has been a real struggle operationally. You know, we had 7 times the amount of calls we would normally get into the call center with everyone trying to set up payment holidays, which was very painful for all concerned. And of course, at the end of the payment holiday, we have to make a decision about what to do with the customer in conjunction with the customer. So do we extend the payment holiday? Do they go on to a normal, back to their standard payment plan, but have to pay a little bit more to make up for the payments they've missed and the interest? Do we put them into interest only? Or is it a combination of those? Or possibly even put them into arrears? So we have a questionnaire that the customer fills in that tells us about their current circumstances. That then goes into our system, and that works intuitively with our system to come up with the best approach for the best answer for that customer and their individual financial circumstances. It then suggests that to the customer. If the customer's happy on that basis, it all happens automatically. So there's no interaction with our agents. There's no hanging about on the phone. There's no getting in queues. Can be done really seamlessly, really painlessly for the customer. But the key thing is it's an individual answer. So rather than just saying everybody is going to move on to another payment holiday or everyone's going to move on to a new capitalized system, we try and look at the customer's circumstances. So that's platforms. Products, we've talked about using our new system to go into new product areas. We've also, last week we announced our second securitization post-lockdown, which will take us, when it completes, to £1 billion worth of securitization. That's fantastic because it gives us cash and money to lend. So with that extra cash and money, we will be looking at extending our product range, moving back up the higher LTVs that we've always been known for, and broaden out our product range. So we'll have some exciting news on that pretty soon. And then finally, communication. So making sure we have the tools to talk to brokers. So whether that is using the robo chat, using live chat, which we don't have currently, but we're going to have fairly soon, interactive IVRs, two-way text messages. How do brokers want to interact? That's how we should be basing this, rather than this is the technology we have to interact with you. We should be asking you, how do you want to interact with us? And we've done surveys a couple of months ago that really helped with that. We're all using Microsoft Teams. We've talked about robo chat, and we'll be doing more of these events going forward. It's very important as we get back to the new normal that we do get back to seeing people face to face, because I still think that's really effective and there's a real demand for that when that's appropriate. However, I do think we will retain, and we want to retain, virtual meetings, Zoom calls, Kensington virtual events, webinars like these. You know, this is the only way we can speak to 300-400 of you in one go, which is fantastic. So it's about getting the best of both worlds and understanding what works best for brokers. So these are the things we're looking at in Kensington and how we're going to be using technology in the next few months. So I'll now invite Francis and Peter to come back to me and basically for Francis to wrap up.
Brilliant. Thank you very much, Craig. And thank you, Peter, for joining us as well. I hope everyone's found some of that, all of that useful and informative. As we mentioned, we'll send out CPD certificates, and you can download and share this webinar with your colleagues and your teams. So thank you again for joining us, and we'll speak to you soon.